Hey everyone, it's Michael. On August 5th, 2024, the US stock market took a pretty big hit. We saw a lot of red, and a lot of people, understandably, started to panic. But while some were busy hitting the sell button, others were shifting their money into what are considered safe haven assets. These are places investors park their money when they want to protect it, and potentially even profit during times of uncertainty. In this video, we're diving deep into the top safe havens that investors flock to and why they did it. If you're looking to protect your hard-earned money and navigate choppy market waters, this one's for you. First up, let's talk about the investment that everyone considers the ultimate safe haven: US Treasury Bonds. These things are backed by the full faith and credit of the US government, which basically means if America goes down, we've all got bigger problems than our investment portfolios. Now, during this recent market downturn, Treasury bond prices went up. Why? Because as investors got spooked, they started pouring money into these super safe assets. And when the price of bonds goes up, their yields or interest rates go down. This is a classic example of the inverse relationship between bond prices and yields. We saw the yield on the 10-year US Treasury note drop significantly, like way more than usual, which tells you just how many investors were rushing to safety. It's like the financial equivalent of everyone trying to cram into the same lifeboat. Next up, we've got gold, the OG of safe haven assets. I mean, people have been using gold as a store of value for centuries, and for good reason. When economies get shaky or there's a lot of political uncertainty, gold tends to hold its value pretty darn well. Now, during this recent market dip, gold prices didn't skyrocket like they sometimes do, but they held their ground. This tells us that while investors were definitely nervous, it wasn't a full-blown panic. Gold is like that reliable friend you know you can always count on, even if they're not the most exciting person at the party. It's not always going to make you rich, but it's probably not going to let you down either. Now, not all safe havens are about government bonds or precious metals. Some investors turn to something called defensive stocks when the market gets rocky. These are companies in sectors that are considered essential, no matter what's going on in the economy. Think utilities, consumer staples like food and beverages, and healthcare. People still need their lights on, their toilet paper, and their medicine, even when times are tough, right? So these companies tend to be more stable because their earnings don't fluctuate as much as, say, a tech company or a luxury car manufacturer. During this recent downturn, we saw a lot of investors moving into these defensive sectors, looking for a smoother ride while the rest of the market was on a roller coaster. All right, next up are corporate bonds. Now, I know what you're thinking. Graham, bonds, that's so boring. But hear me out, because not all bonds are created equal. We're specifically talking about high-quality corporate bonds, the kind issued by companies with really strong financials and a long track record of success. These bonds are rated ADA or AA, which is like getting an A+ on your financial report card. They offer higher yields than US Treasury bonds, but they do come with a little more risk. However, during times of market uncertainty, these high-quality corporate bonds can be a good option for investors looking for a bit more return without taking on too much risk. It's all about finding that balance. Last but not least, let's talk about fixed annuities. Now, annuities often get a bad rap, and to be fair, some of them are pretty complicated and come with a lot of fees. But fixed annuities are different. They're basically contracts with insurance companies where you hand over a chunk of money, and in return, they promise to pay you a fixed rate of return for a set period, or even for the rest of your life. They're especially popular with retirees who are looking for a guaranteed income stream and want to avoid the ups and downs of the stock market. Now, fixed annuities aren't going to make you rich quick, but they can provide peace of mind, especially when the market is going haywire. It's like having a financial safety net. So, there you have it, the top safe havens that investors flocked to during this recent market downturn. Whether it's the security of US Treasury bonds, the stability of gold, the dependability of defensive stocks, the value of high-quality corporate bonds, or the guaranteed income of fixed annuities, there are options out there for every risk tolerance and financial goal. Remember, investing isn't just about making money, it's also about protecting the money you've worked so hard for. By understanding these safe havens, you'll be better prepared to navigate any market storm that comes your way. As always, I hope you found this video helpful. If you did, please give it a thumbs up and subscribe to the channel for more financial tips and insights. And be sure to let me know in the comments down below what your favorite safe haven asset is and why. Thanks for watching.